Okay, finally got this working. Shout out to Moose for helping me in my old age get this tech stuff working. This should take like 20 to 25 minutes. I mainly wanted to go over watch list and scanners and some of the setups that we use, and I'll talk a little bit about some other stuff, the volume profile just a little bit, triggers a little bit, and some price action stuff, but mainly this is going to be about scanners and then the different setups that we use. So, um, obviously, like I'm not a professional trader. I am not giving you financial advice. This is just stuff that I think works. It works for me. You should test it out and see if it works for you. I would not take anything I say as fact. I would go back and I would test everything that I say and see if it works. So, that being said, let's jump into how we make watch lists for option triggers specifically. So, for those of you that don't know, work full time and don't get to day trade, but maybe a couple days a week. Um, so I will go through my different scanners on the weekends and then the nights before, if I know that I'm going to be able to day trade the next day. So over the weekends, I'll look at weekly setups and then some daily setups too. And then the day before, I will look more at daily charts for setups that I like. I've posted a lot of the scanners that I use in our Thinkorswim script room. You can take those and incorporate the ideas into other places. So I will, like I did this today, go through. These are all the different scanners that I have built in. I really only use about 6 or 7 of these consistently. The rest of them are ones that I might glance at, or if I'm gonna look for common plays or small caps, etc. Some of them are really specific to that sort of stuff. But most of these have a specific use, and there's probably, like I said, 5 or 6. We'll go over the ones that I use, every week or every night before I'm going to trade. So, just starting out, the different ones that are on here that I have posted that I use, the double inside day, the double inside week, if it's a weekly setup. Um, the Holy Grail, there's two. One of these I just have preset for weekly and one for daily. This inside day ATR greater than 5, we'll talk about that. This inside bar uptrend that me and Jeff worked on together for a long time, and the pivot machine gun. So I will go through all of these briefly and we'll talk about them. The double inside day. So this has turned into one of my favorite ones. What I do, literally, is I'll just, when I'm starting to make a list, I will get in here, scan, and the things that I'm looking for right off the bat. I'm looking for names that I have traded before, that I'm familiar with the options chain. I know that there's going to be liquid options and that there will be good small spreads, et cetera, stuff that I'm familiar with. So right off the bat on this, GameStop I've traded a lot. I've traded Citigroup once or twice, Macy's a few times. Honestly, I probably would not even look at the rest of these. I don't have 18 hours to go through every single thing on my scanner, so I really will narrow it down to things that I'm familiar with when I'm looking at this. So um, I would go in here, look at GameStop. I've already drawn it out on here, but then kind of glance at our setup and see if it's something worth pursuing. My dog is freaking out in the background. Um, GameStop I really liked when I was looking at it this week. We had this large bar on Tuesday, and then we have this kind of pennant flag right over a fib here that's setting up pretty nicely. So I can tell you just from looking at this right now, that would be one I would want to probably play. If you look at it, you have really good range, and then we have this really tight consolidation um, into Friday. So I would write it down either like on an actual like notepad or just on a Word document. I also have a little whiteboard sometimes I'll write stuff down on, and I would just put like if it's going to be a day trade or if it would be more of a swing trade where I would look for stuff like a month or greater out, and then kind of what my price targets would be. On this would be like a day trade for me. So the double inside day, let's talk about why this is a good setup. Um, you guys all know options. You have that two kind of big things that go into it are the volatility of the stock affecting the options price, and then your time decay if you're holding on to an options contract. So the double inside day is kind of nice because you have less volatility over that time span. Um, You also have, if you're looking at weeklies, and let's say it's like a Wednesday and you're going to play a same week expiration, that options contract has really decayed over the last couple of days. And if you can play the breakout, you can get the contract for a relatively cheap price compared to what it was probably at even the day before. And you have a lot of times really nice room to move to your next level. So double inside day can be really nice when you use it for a breakout trade when you're trading options. So on GameStop, with this, I would probably be looking to play a break above this 212 level. You've got like a little bit of room and then nice room up to 226. So I'd probably set my trigger at 212 and then my low trigger, you could really set it either one. That's like 199, 198-ish. I like the calls better here because your puts, you've got both these levels right here kind of together, and then you have a fib right below it, and then you have your EMAs below that. So I think that there's more room on the calls, but you could play either one and just take what the chart gives you. Again, love these consolidation plays where you're getting a little bit of a bargain with your options contract, which is why I think the inside days, and specifically when you've had consolidation for longer periods, can be really powerful when you're playing breakouts for options. So I would write that down. I usually would put like GameStop, day trade, and sometimes I would even write the pattern. So I would freehand like double inside or something like that, and then come back to it later when I'm narrowing things down. The rest of these, again, I'm not going to go through all these, but I would glance at the ones that I'm familiar with. The other thing that I look for is I try to, on the weekends, go through the different ETF sectors, and I'm looking for things that I think are primed for a move one way or another. So let's say, for example, I was looking over the weekend, I felt like tech was about to break out. Then I would take a closer look at any tech names that popped up. Or I felt like this week, like energy, we think that energy probably will have a strong week if the hurricane knocks all these oil rigs offline. So you could take a stronger look at some of the energy names as you're making this. So it doesn't just have to be names you're familiar with. You don't want to pigeonhole yourself into trading the same like 5 stocks over and over, although that has benefits. Still be looking at other things as well. So that's your double inside day. The next one we do a lot is the double inside week, same idea, different time frame. We'll talk about swinging options later. I typically look for contracts at least a month out. Typically, if you look at that theta decay curve that I've posted before, you want to be more in that 2 to 3 month time frame. You really want to give yourself the chance for the play to work. That also lets you average down, and if the the underlying stock price moves against you, you can um, average in without just getting destroyed right off the bat, which happens if you are closer to expiration. So that's the double inside week. The next one though is the Holy Grail scan. So go in and scan that. I am going to use Roku because I have looked at it and it has a pretty nice example of something I wanted to talk about. So go and look at Roku. Kind of some old stuff you can see on here, even visually. We're kind of cup handle-ish pattern here, right onto this volume node. But what I wanted to talk about, so if you look here, it's picking this up as the Holy Grail pattern, which is what I just stole from the Trading Words guy. And all these scanners, like some of them I've made, probably half, and then half I have taken from other people and just repurposed them for how I trade, or I have adjusted them to how I trade. So you guys all know that that's a big part of trading, is figuring out how you want to trade and then finding tools and adjusting the tools to how you trade. So he named this. I have really not changed it. I feel like it works well. So your Holy Grail setup is an outside bar, which here you notice we take out the high and the low of this bar, followed by an inside consolidation bar. This is actually the example that I really liked when I was looking at this and kind of coming up with examples for the video. If you notice here, you have got this really nice high wick and this nice low wick outside the body. So this is like the perfect outside bar that I would look for on the Holy Grail setup. So don't make this too complicated. It does not need to be complicated. All you're looking for here is there are people that have gone long down here, and they are probably going to use this as their stop loss, this 443. There are people that have gone short up here, or gone long at 490, and they are going to use this if they're short as their stop loss. So you have buyers and sellers, excuse me, buyers on both sides, bulls and bears, um, that are in this play. And usually they're going to use, if you're short, you're going to use high of the day as your stop, and if you're long, low of the day as your stop. And the same thing, I mean, you may have buyers all the way up here that are chasing, and they now have a cost average of like 486, or shorts down here um, that have short and may have an average of 448. So you have lots of good potential to trap people in this bar. That's all I'm trying to say. So you have this bar, lots of action, and then you have this next bar of consolidation. So everybody in here is probably still in because we've traded within the range the whole day. Now we have more buyers and sellers coming in. So there's a lot of people that are going to get trapped whenever this breaks, and there's a lot of room when this bar breaks for movement as people get stopped out. So a lot of times what you'll see, this bar didn't do it, but whenever you break the higher low of the inside bar, the next bar a lot of times will go straight to the higher low of that engulfing bar. So it didn't do it here. It broke 452 and went to 447, but if you notice the next day, we gap down, we retest probably at open would be my guess, and then we break this bar, and then it's just a cascade. So people are getting stopped out. There's people that have gone long that are trapped up here, and it just breaks all the way down here. So it's a really nice setup. Again, I have noticed just um, ancillary time doing this that a lot of times you'll get the break, and I usually will set my price target close to the higher low of this bar depending on which direction we break, because a lot of times it will hit and will go that far. Not always, but it's a good kind of, if you hit it, I would definitely be taking some profit there if you have not already, I guess is what I'm getting at. So on this one, let me change this off of this. We have a lot of upper wick action with essentially none down here at the bottom. So kind of, I guess, a hammer. So I guess you have people that could be short up here. You could also have buyers that are trapped up here. So this would be probably a really nice play if we broke down. Um, I kind of like this in general as more of a long-term bullish setup, but you could set triggers on either side. If you broke above this 359, you have room pretty clearly to 368, so that's a good 5-point move. If you broke down, you have this support at 350-ish, and then nothing really until 340. So it would move slower due to how many people have been trading here, but you have room on both sides. So hopefully that kind of explains the price action behind the Holy Grail setup, why it works, the price targets we tend to look for, etc. All right, moving on. So next one that we do, and we're going to talk about the volume profile in a second, is, or maybe we can just talk about it now. Let's look at, I think it was this one that had the setup that I liked. Yeah, okay. So this was the first one that we had on the screen. And I had actually looked at this on the weekly. Yeah, the weekly. Okay. So let's talk about the volume profile and kind of how to practically use it for um, making your trades and setting your triggers. So all this is showing you on the side, these bars, this is just a visual representation of how many shares have been traded at each price level within the range that is visible. So with you featuring my dogs, with you, you have the volume point of control, which is 101, which is the area where the most shares have been traded since the thing started trading, whenever this was 2020. What tends to happen there is that you have, to me, that represents an area that big institutions have bought in or sold lots of shares, and they will step up and buy or sell shares at that spot. So if we broke down, you can expect support at an area where there has been a lot of buying and selling. And it will act as a area where price will come to a stop when it hits it if you're on an upswing. So up here, if it just rocketed, I would expect it to stop somewhere around 155. That's been an area that people have reached price agreement. There's been a lot of buying and selling. And if you broke down and there was tons of selling, I would expect there to be people stepping up around 101 to buy back in, or somewhere in this realm. So the little synopsis I posted really is the most useful explanation about as you break into these areas that there's a thinner volume profile. I think it's the technical name is something, the volume desert. If you break up, there's less people that have bought in here that are selling at break even, and there's less people trying to take profit because more people have bought in down here, so they're along for the ride. Um, Practically, this just means that you're going to move really quickly as you reach these areas that are thinner, and you're going to move much more slowly in the areas that are thicker. So what I really like to do as far as incorporating this is I like to look for charts that have a trigger set up right going into a volume desert or a thinned out volume profile like this. So if you look here, you have this 129 resistance, which is a daily high. And then your next real big resistance that stands out to me is this at like 140. And you notice once we clear 129, you have like a point and then you reach this really thin volume area. So to me, that's the perfect setup is if you have a very clear trigger level right on the edge of a volume gap. What tends to happen is if you break into that gap, you're going to move extremely quickly to your next either resistance or your next volume shelf or node. And on the downside here, you've got kind of a daily trigger on this outside bar at 118. You do have your EMAs down here, but then you have a little bit of room to 114 and then really to 112. So that's how I use it. I look for areas that my triggers line up with a thinned out volume profile or breaking into a thinned out volume profile. You also will notice that these stocks, I think the Trend Spider guy is the one who calls it like a launch pad, and it is pretty true. You'll have big consolidation on, if you had like, imagine this as an overlay, so this is coming this way, it would look like it's just coiling on this volume shelf for a move. And that's true. So if you think about it as like the VPA accumulation and distribution, so it's accumulating or distributing before a break one way or another, which is visualized by all of the shares being bought and sold by this massive volume shelf. So I tend to like to wait for it to break off of the volume shelf off a trigger before I buy because it may consolidate for a length of time before it moves. And Roku's a good example. If you go look at the daily chart on Roku, it's sitting on a volume shelf and it's just consolidating right now. So when it breaks off of that, it should move dramatically. But again, you can kill yourself with options waiting for the move if you have bought something that's like a 2-week expiration. So if you're trading something closer to expiration, I would wait for the move. The too long takeaway: look for triggers that go into volume gaps. And know that as it approaches these thicker volume areas, that's going to be a spot where people are going to take profit, are going to step up and buy. Institutions are going to be looking to buy back in. So you're going to have, that's going to act as a spot, not true resistance, but the stock is going to slow down and probably settle in that general range. That is my volume profile spiel. Going back to the watch list and the scanner. So the next one that we need to look at, so this inside day, this has actually turned into one of my favorite ones. The ATR greater than 5, all that is showing you is that you are trading a stock with good range and that is typically volatile. And you're combining that with an inside day. So something that has moved well or tends to move well, that has had a consolidation day or a tight range day. So I don't remember which of these I used last time. Let's just look at Snow or Docu. Look at Snow. Yeah, this is the one that I think was my favorite setup. So you'll notice like Snow definitely has these days where it can go, what is that, 272. That's a 23-point day. That's a 7, I don't know, 22-point day. I mean, even this one is a 17-point day. And then you notice yesterday, or Friday, it's like a 7 or 8-point day. So this thing has a lot of range, so that's what our ATR is looking at, but we've had a consolidation day or a tight kind of range, a tight range day previously. So that gives you really good opportunity to buy a trigger break and then know that the stock has the ability to move quickly if things line up. So this is a decent one. Again, we're kind of on a thicker volume area, which reminds me, I think someone had talked about in the chat, what about the different time frames for the volume profile? I really only use it on the larger weekly or daily. I don't care about it intraday as much. To me, your daily levels are really what matters when it comes to this intraday buying and selling as far as where shares are being bought and sold, this doesn't mean anything to me. But I do use it for the daily and the weekly just to set my levels up. But I don't really care about it when you get down on a smaller time frame. So if you look, this is a little bit of a thicker area that it's at. Um, Obviously, if it broke above like 310, it gets thinner, and then below whatever that is, 298 to 285. But this is a pretty good setup. So you've got this move from 294 down to 290, so you have a few points, and then you have a gap to 286, so that could really easily fill down. Above 300, you have room to 307, and then if you go back, and you don't really have, you've got some resistance like 320, 328. This thing can definitely move very quickly, so that was one I had on my list. So that is how I use the high ATR scanner. The next one, this inside bar uptrend, you can use this for commons or for options. I actually use it a lot for commons. This is just looking at something that's been in an uptrend. I think me and Jeff said it for 3 bars in a row, followed by a less than average volume pullback. Yeah, so at least 3 green bars in a row, and then you have a pullback on lower than average volume. And I really like to play these as continuations. So I will look for a break above whatever the pullback is. So here it is like 305. And I'll wait for the consolidation to end. That's why I set the trigger up that high. And then I'll look for the continuation to the upside. You can also play them as a breakdown. But really, when we set this up, we were looking for something that was starting an uptrend and had taken kind of a breather, and you could look to enter. You could enter this short on the downtrend. You could enter this as you could take a long position with your stop down here. You could do whatever you wanted to, but if you're going to trade it as a breakout, I would wait for it to break this bar's high and then look for a continuation up. Microsoft is a funny one because we're at all-time highs. So it almost, to me, might need a little bit of a pullback. But again, you can trade it however you want to. That's the way that we set it up on the scanner. And we've had pretty good success with that, with commons and with options. I kind of use it for both. Okay, last one is this pivot machine gun. I think J&J was the one that had the best example. So the terminology is from the Strat people, which those videos are really good. Was it this one? Let's see. Maybe. I'm trying to find. We'll look at Costco next if it wasn't this one. I cannot remember off the top of my head. Let's look at Costco. So the pivot machine gun, basically all that is consecutive. If you are in, yeah, here we go. Let's look at this. If you are in an uptrend, it's a series of higher lows in a row. So I think that the scanner sets it for 4 or 5, but it takes the very bottom low of the day. So this is the low, higher low, all the way up here. I really like to play this exact setup. So if you took this bar away and we just had information to here, that's the setup that I'm looking for. I've noticed just from playing these a lot that you get a much bigger move, like the backside of the trade happens faster. To the downside as opposed to a reverse to the upside. But here's what's happening. So you have people that are buying in. You have people going long. They're setting their stop loss here. More people are buying in. If you bought this day, you're probably setting it here. If you bought here, you might still have it here. You might be moving it up. But just in general, people a lot of times will be lazy and their stop loss is the low of the day. Or if you're short, it's the high of the day on the opposite direction. So all these people have all these different stop losses going all the way back to down here. And they're probably moving them up, but some are leaving them, et cetera, et cetera. So what happens is you wait for the low of the day to break, and then you are looking at your targets at each consecutive low of the day. So this breaks, people are getting stopped out, they're selling their shares, the momentum continues. This one breaks, people get stopped out, they're selling their shares, et cetera. And it's just a snowball effect. So you would enter here, and then you tag out 1, 2, 3, take out 4 straight pivots on the way down before it stops. So you can have these really broad moves. You can play it to the opposite side. So if you think about it in reverse, people that are short, stop loss, stop loss, stop loss, etc. So you could wait for the break above and try to target these consecutive high of days as areas that could stop out shorts and be looking for momentum back up. um, I just have found that that's not as successful as playing it to the downside. So you can play it either way. I like to look for setups. We can have these massive kill candles to the downside. So I think that's the last one. So what I would do, you go through all of those, you write down your best setups. I typically have found that if I make a list that's more than 3 to 4 day trades setups and 3 to 4 weekly kind of swing setups, I get spread too thin and I end up putting stuff on there that I'm kind of stretching. So I'll write down all the ones that I think look good, and I'll chart them out, and then I'll figure out how many I have. I think this week I had like 9, and then I'll try to limit it to 3 to 4 of my day trades and of my weeklies, and then go with that. You could definitely do more. That's just what works for me. I think it also helps me really narrow down to the A plus setups. And there may be weeks that you don't have 3 or 4. You may have like 2. I didn't feel like there was that many great swing setups this week. So it's just how many ever you end up with. So I'll write them down. I'll bring them into my Webull, and I have all these different things. I really need to edit these. These are old, but you can either have, I think Moose and Ash have talked about how they have just like a single long list of things they play and they go through them. That's great. Um, I tend not to do that. I think that that's really what you should do, where you should have just different, like an airline um, grouping, a healthcare grouping. I think that's probably the easiest way to do it, and then you can quickly kind of click through during the day and see what's moving, what isn't. But I'll drag mine in. Daily plays, this would be kind of a backup if there's things that I kind of want to keep an eye on, but maybe don't have triggers for, and then weekly plays over here. The last thing I was going to talk about really briefly, I mentioned the sector setup, and you can use, if you have nice different groupings, you can use these as an intraday idea of what's moving and what isn't moving, and look for things that are lagging depending on kind of what's happening. So one of my favorite things to do, there is a website that you can look at the different sectors and their performances. During really red SPY days where you have these huge pullbacks, I'll get on there and I'll look for the worst performing sectors, and I will look for things that are close to even or very slightly green. I don't want like a big move to the upside, and I don't want it to be super duper red. So I'm looking for strength relative to the rest of the sector. What usually will happen if that thing doesn't have news and it's just strong is when the sector bounces back, that thing will absolutely rip. So I'll a lot of times add that to a separate watch list and kind of keep an eye on it. Same thing if SPY is really ripping and you notice that a sector is super duper hot and you notice that something is kind of lagging behind and is barely green, probably the next time that sector pulls back, that thing is going to plummet. So you can also do that intraday. So like NEO and Tesla, a lot of times will pull the rest of the EVs in one direction or another. So if you get on here and you looked and you're like, man, every single thing is green except RIDE is red, that can tell you that probably the next time that these things go red, it's gonna plummet. But you also sometimes, I do think that it's worth knowing like what tickers follow each other. So like if NEO goes, a lot of times you'll get some sort of bump on XL, you'll get some sort of bump on Fisker. So if they're kind of behind, you're like, man, NEO's up 5% today, Fisker is basically break even, or XL is break even. Sometimes it's worth it to take a little bit of a position on those if the chart looks good for the bump that they're going to have. I think that that's a good way you can kind of get in close to the ground floor, so pretty good RR, and have a nice move off of it. So that's the other thing I was going to talk about. Definitely have your different setups. I am a bad example right now because I haven't edited these in a while, but I think it's helpful to have a lot of different watch lists that you're keeping an eye on that you can glance at throughout the day. And I think that's it. So hopefully this was helpful. If you guys have any questions, let me know. I will link the ETF website onto the chat later on.